Now, Matt, do you think that we over-rewarded the bank earnings?
I don't know if we over-rewarded them. We took a lot of steam out of them last year. They underperformed so greatly. So this was the time for the banks to explain what they saw over the last quarter, and they got credit for it. We saw them trade down pre-market each day and then rally substantially throughout the day as the conference calls occurred. So I don't know if we're going to end up rewarding them enough in the long term, because they may be the biggest. They may have the most upside potential in 2019.
Earnings are okay so far, but let's talk about first quarter. Will the government shutdown and trade spats hurt this occurring quarter?
It will, but that's going to be a built-in excuse that they have. So again, you're going to get another quarter of grace period. So that's what we're starting to see when these companies are warning. When you come out and warn, and you suffer, i.e. Apple, some of the airline stocks that we've seen. These companies are warning, but now they have this grace period built in. So if they exceed or do much better than they forecast, they'll be rewarded. And again, so it's a built-in excuse. Hopefully we get over with soon. We certainly don't need to have this lingering too much longer.
How about lower unemployment and higher wages? Is that something that's more of a concern for the Fed or companies as well?
No, I think right now it's a focus of the Fed. But, these numbers, if they continue, if the shutdown occurs through Saturday, it's going to start affecting the employment numbers. And they're going to start now having, a month grace period where we're not going to understand what they truly are. So, the Fed's in a real bind here. They really are. The data they're looking at is going to be so skewed, whether it's trade tariffs, whether it's shutdown, whether it's a holiday. They're not going to know what to do. So we're going to extend these things out even further, and that's just more and more confusion for the market.
You mentioned the data. If we even get the data, I saw that we're getting durable goods retail sales on January 28th now, not even next week, because we have a day off.
Yeah, it's going to be really interesting. Again, it's all prolonging. It's dragging it out, and that's a problem. The market doesn't like this. But right now, what the market does like is the fact that we got good valuations in stocks from the December lows, and we're starting to see earnings that are somewhat accommodative to buying, and we're getting the buy that dip mentality again and not sell that rip. And the bank stocks have been, obviously the biggest, example of that.
Yeah, you know what? It's since we don't have data to focus on, that's what we're focusing on, the earnings, which you're saying is pretty positive. What are your thoughts on a stronger U.S. dollar versus weakness in other economies? Even China, that was kind of weird this Monday.
Yeah, I mean, those numbers, didn't sound good, the trade data that we had with them. So while the surplus number was obviously huge, that can kind of be explained because it was offsetting what we expected for the trade balance. So it was forward purchasing. So that's kind of to be explained. But those other numbers weren't even close to what estimates were. That's kind of scary. Brexit, or, what's going on there, it's not a good optic right now. And that, again, is confusion. But the market is overlooking all of that right now because I think they have this built-in excuse where if something were to occur, we can say, yeah, we kind of expected that to happen. So, again, we are the best of breed right now. And that certainly hasn't changed based on what we're seeing as far as earnings or our economy.
Feels good to be the best of breed.
Yeah, we'll take it, we have been the leader for quite some time. We were early in, we were first out, when we're the longest out.
Thank you so much, Matt. Our viewers always look forward to Thursday. Great way to kind of end the week. You have a nice weekend, my friend.
I certainly will. It's a long one, and everyone enjoy.
Sure is. What? Bye, guys.